Welcome to the Seven Figure Leaders podcast. This podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. And there you'll find the link to apply. Welcome, and today we've got Mike Deacon.
Hi there. Thanks for having me on, Tom. It's good to be on this little podcast chat.
Pleasure to have you. So yeah, you've been around the block and you've been doing for a long time. So tell us what you've been doing and what you do now.
Okay, so I'm in commercial finance now for 47 years. What's behind me is a book that I've just co-authored with 21 other souls who are from all types of businesses around the world, and all of them have a journey as to how they got into business. So, I'm one of the co-authors, and that's being launched Tuesday the 15th of October, officially on a live LinkedIn stream, 8 p.m. UK, 3 p.m. US, that's EST time, that is. So yeah, it's all about journeys, but yes, commercial finance is what I do. It's what I do.
Okay, and so anyone listening who fancies joining that webinar, you've just heard the details.
Yeah.
So tell us a bit about the journey you've been on over the last 30 years or so, business wise.
Okay, so part of this is in the book, but my journey was I went into the city back in 1977 working for a major bank, and that's because I had to, because my folks were very ill and there were bills to pay. So I was studying at university and had to drop everything to basically go to work, and I never went back. I just carried on working. So I worked for a lot of institutions. I worked for some major AAA rated banks, ran some credit departments, did some big global project finance funding, including the Channel Tunnel. So one of my small claims to fame is I was one of 32 people that negotiated that Channel Tunnel contract back in the day. So
Wow.
when you could build large infrastructure for a few £1 billion, but that's another story for another time. So then I went to work for a quoted financial services group in the UK, ran their credit team, and then I worked for a major office furniture manufacturer and ran their captive finance company. And then I went to work for a large global conglomerate. So fast forward 30 years to 2007, and I found myself gardening because a business I bought was so successful that the people I worked for at the time decided that they would keep that, saying thanks very much for finding the business and enjoy the rest of your life. So I was 50 years old then and thought, what am I going to do? So I ended up setting up my own business and pivoting. So I did a lot of work in public health and public sector work. So I completely pivoted, but I always kept my hand in as being a commercial finance broker. And I went back to doing what I really enjoyed doing, which is helping businesses to actually sustain, survive, grow, thrive, all those things.
Okay. And so when did you start this business?
2008.
2008. That was okay. I thought you said you did public service stuff and then
I did, but when I set my business up, I couldn't actually, I had a restricted covenant in my former employer's contract, which said I couldn't work for a finance company for 12 months. And it was the start of the financial crisis. So can you imagine, having spent 30 years in finance, can't work for a rival because it's contractual, and it's the start of a global financial meltdown. Not a good set of cards.
Yeah, a bit tricky. Okay.
Yeah,
So then, okay, so you've been doing it, 16 years or so?
Nearly 17 years, yeah. So I did a lot of consulting. I ran some public projects for the Department of Health and a few other things. I used my financial experience to be able to transform and I actually set a consultancy company up for the consultants concerned. So I provided commercial advice, told them how to do it, found the right lawyers and attorneys to actually help that business set up correctly, and then they said, "Well, why don't you run some projects for us?" So I said, "Fine, do that." So I did that for several years. So, and I was fortunate enough at that point. My wife had also just been made redundant from the NHS, and then was working for the same group of consultants. So it ended up that she and I ended up working together, completely unintended, but we did. And she still has, a place in the business now. Although, the public health and sort of consulting in that space work is less important now. I'm just focused purely on arranging commercial finance in the UK and around. So that's what we do.
So let's dive into that then. So who are you helping? What types of businesses, and what are you doing for them?
Right. Very simply, I help any business from a small business, a startup business in the UK, and there are plenty of those, to right through to sort of large conglomerates or people looking to do acquisitions, investment deals, trade finance. I've got people working around the world doing trade finance deals. I've got people in that space. I'm being asked to sort of look at projects which require either distress acquisition investment or equity investment, and I have partners I work with who actually can provide the leads into those particular sources of revenue or funding. But yeah, really, the only things I don't do, I'll tell you the things I don't do. I don't do residential mortgages or buy-to-let, but I do commercial funding, so commercial mortgages, as well as all the range of typical finance products you see in the everyday market. And I have my partners both in the UK and overseas as well.
Yeah,
I like your silhouette man in the background.
It's a glass door, and he's right.
Yeah, glass door. Yeah, unfortunately, these things happen.
Yeah,
sorry, occupational hazard.
Yeah. Okay, brilliant. And so you said that you pretty much help a range of businesses there. So what are the main? Let's say I'm a business and I want to take us through a case study of a.
Sure.
There's no typical answer because you've worked with so many businesses, but give us some examples then of somebody, so that somebody listening to this can relate to whether they might be in a position when they need to raise finance, or how to identify when they're in that situation.
Yeah, I think a lot of businesses ask for money at the 11th hour, in the 59th minute, and the 30th second, because they don't plan. I do a lot of postings on LinkedIn, which are educative. So essentially, I'm telling people what they should do to prepare themselves so that when they ask for money, they're well prepared. They know what they need and they know what they ask for, and they ask for it. So they ask for it in the correct way. So many businesses are underprepared or reactive as opposed to proactive. So typically I've got a case at the moment, for example, just as an example. Small business, husband and wife, they make cakes. Nice little business. And they built it up to a really, really good manufacturing and wholesale distribution business. But what they really want to do is they actually want to go retail as well. So they're planning to expand their manufacturing, but also have, if you like, a practical retail outlet. So really just a very, very nice tea and cake shop in their local area based in the Midlands. And they're looking for some funding for it. But the problem is that they've already borrowed money, so they're quite stretched. So I have a fairly large cohort of lenders in my wheelhouse, and one of them happens to be a regional lender that is supported by various government schemes, and they invest money through loans and through support grants into local businesses in that area. So there happens to be one, and this is based geographically. So it's specific, it's postcode specific, and I happen to know them. And what I've actually done is I've proposed a deal to them. They just want the client to complete a few of their forms because they're very particular about the way they want it done. And I may, at the moment, I'm trying to get them a loan that's under the UK's growth guarantee scheme, which is the former, how many different guises have that's been? That was the Sybils, and that bounce back, which was the enterprise investment scheme, which was the old small firms loan guarantee scheme. It goes back all those different iterations back 30 years. But that's basically what it is. It's effectively a government-supported guarantee for an investor lender to actually put money into regional businesses to basically promote local business development. So you've got to find niches. So my job is like I'm a marriage counsellor between the customer and the lender, My job is to make them betrothed and to actually make the magic happen.
That's a good analogy. Like that.
Yeah, and that means they have to be prepared, because the level of detail today compared to maybe even pre-2008 is quite dramatic. Lenders are increasingly risk averse, and the bigger lenders are more risk averse than you realize, because all they want is the cream of the crop. They don't want to do the general Joe Soap funding that most businesses need. So I need to have a pretty large cohort of lenders available, because I've been in this industry a long time. And I'm also a non-exec director of my national trade body, the National Association of Commercial Finance Brokers. I know a lot of people. So it means I can find the right solution for the business. And there are some fantastic new lenders coming through from the non-bank space who have some really innovative funding solutions. And the use of technology has really increased in the last 2 or 3 years quite dramatically. It doesn't actually put someone like me as a personal broker where I'm actually dealing with real people, because there is a real person in every business. The issue that you've got is that the way in which lenders now market their services and offer their services is completely different. It's changing. It's evolving very fast, and you've got to keep pace with it. So, I work with, lenders that do a mix of the old style. I want to see the papers. I want all the proper checks and balances, KYC, all the financials. Now, because we have automated access to bank statements, to accounting systems, people can semi-automate this process by going direct to look at the customer's own paperwork that they use day to day in their business, which wasn't there 5 years ago. It's there now. So that helps me. It's not a bad thing. It will help me, because it means I can get deals approved more quickly. And then they top it up with the regulatory and the things that they need to complete their risk assessment check before they put money out.
Got it. I see. And so you said a couple of interesting things there. So obviously anyone who's interested in understanding a bit more about what they need to do, they can follow you on LinkedIn. But why didn't you give us a little snippet of some of the stuff that you post? And I suppose we could make this conversation hours long, but give us the highlights.
Yeah. The highlights really are very simple. You've got to be prepared both financially. You've got to make sure that your books are up to date. You've got to make sure that you pay your bills on time. You've got to make sure you do not have any judgments against you or any adverse risk. And there are businesses and people who have failed but still can't get money because of a past failure. So, for example, a director is set up a good, strong business, but had a previous company dissolution that hasn't actually completed, because you can liquidate a business, but it hasn't actually been dissolved. That stops people getting credit. You'd be amazed. And people can't believe that something that happened years ago is still impacting their ability to raise money. So make sure you've got all your bases covered and be prepared up front. If you just ask for something there are products that are easier to do. For example, asset finance is much easier because it's a fixed asset, whatever it might be, a machine, a car, plane, or whatever it might be. And then you're just looking at the asset as a security. How much deposit have you got? Do your numbers stack up? Because because it's a closed transaction. The lender's secured on the asset. They may take guarantees. Sometimes they take a debenture, but most times they rely on the asset. So that's straightforward. Invoice finance, pretty much the same. It's all about the asset being the invoice. So that provides a security. If you've issued an invoice to somebody, you basically can advance pay that. And then you effectively, the lender gets their money by the collection of that money, less their charges. So it's, that those are very easy. But then if you're looking for growth finance or acquisition finance, then you're looking not just at the business that's borrowing, but the target, people. There's a whole load of work you've got to do. So your business plan's got to be robust. You've got to show that you're robust. You need to show that you've actually planned ahead. Or you're looking for growth capital, expansion capital. That's business plans and forecasting. All of these things. Every deal is different, but every deal has the same componentry, which is be prepared, provide the detail, know what you're looking for, and be prepared to give something away. It might be guarantees, it might be security, it might be something else. But be prepared.
And so for most business owners then who are entrepreneurs and they're good at what they do, but they're not necessarily numbers people, they don't really know how to get the books in order. They don't know what the lender's going to ask for. They don't know, how to get all this stuff prepared so that it's an easy yes for the lender. is that stuff which you're going to help them prepare, or do they need to?
I can help them prepare, but more often than not, this is where you come in. They need your services because there are a lot of people who run a business, especially the smaller SMEs. They can't afford or don't think they need, in no particular order, a financial advisor. So a CFO, a bookkeeper can provide an invaluable service to a business because it takes away the stuff they really hate doing, which is tidying up the paperwork. They like to be on the job doing the work. They forget about the fact they have to invoice to get the money back from their clients. That's almost an afterthought because they're so immersed in doing the work, okay, or making the product. So getting a good fractional CFO or a good bookkeeper, not an accountant necessarily, unless you're a bigger business. The bigger the business becomes, the more necessity there is for a permanent finance director or a permanent accountant to actually provide direct advice. But you do need that discipline because when you miss things, like missing payments on loans, missing your tax deadlines, stuff like that really matters. I'm FCA regulated. I have to remember all my returns and I have to do them. I don't have anyone to do it for me because I'm that way inclined. I do everything myself, but I still use an automated system because most people now use online accounting systems. And it's great for my accountants because they can interrogate stuff. Now I ask them, can you make a small change for me? They just do it for me. So, you have to have that relationship with your finance support, whether it's your accountant or your CFO, fractional CFO, or, bookkeeper. You've still got to know where you are. Because if you don't know where you are with your business, with the money and what you've got coming through, you can't plan for the future. You can't plan for growth. You therefore can't leverage that should you need the money to do it.
Exactly. And I actually work pretty closely with lenders or brokers like you, because very often you'll come across businesses which can't get funding because the books are in a mess or because they haven't collected their payments for X amount of time, and they can't borrow any money against them. And it's a case of getting those businesses ready, so that they can then come back to you and borrow money. So
absolutely. Yeah. That's such a true statement. And the number of times that you see businesses who fail because they've failed to prepare, because they're not ready. And then they get irate because they can't get what they want. The other thing I would say, just as an observation, and I know we've got a few minutes left, is people, when they ask me the question, what's the rate? I go, I'm not answering that question. I say, what's your credit risk like?
Yeah.
And they look at you, or they stop and think about the question. It's different in business to what it is, say, if you wanted to borrow money on a personal loan or a mortgage, a residential mortgage. And here's the really ironic thing. It's a bit of a contradiction. But lenders are happy to lend to people who have a job, and they lend cheap. But businesses pay the people who've got earnings to prove to the lender. And it's more expensive for a business to borrow than it is for an individual to borrow. Yet without the job, the individual can't get the cheap loan that they need, whether it's personal. Please explain that to me, because I don't get it. I've been in this business a long time and I still don't get it. It seems to me a total oxymoron.
Yeah.
I think I know the real reason why. It's because lenders borrow wholesale from depositors and from institutional lenders. People put money into these lending organizations. Whether you're a bank or a non-bank lender, they still have to keep their tier one capital as an authorized bank. So 8% of their capital has to be retained in free cash because it's leverage and it covers your bad debt, your wages, your staff, blah, blah, blah. But non-banks can borrow wholesale from the banks. So you've got this chain, and people don't realize that the chain of borrowing, the business lenders, there's 2 or 3 layers of the layer cake. There's the ultimate lender. There's a lender that lends to the lender, and the lender that lends to the lender that lends to the lender. So there's 3 layers. Sorry, that sounds like a really terrible Irish limerick, but that's the way it is. And people don't understand that because why should they? but it's important. It matters. So the answer to the question, what's the rate, is what's your credit like? And until I see what that is, I can't even give you an indication of what that could be. And that's in the eye of the lender. They're the ones who dispose. I just propose. That's what I do. I propose deals. But I try and match. I'm as much a matchmaker as I can be. I marry the right borrower with the right lender and make it happen. So my little story about my cake company, I've actually found a local lender that will actually provide the facility and may go beyond what others would lend because it's in the area, it's government supported, and their whole ethos is to help local businesses grow and expand. You've got to match the right lender. You've got to be a marriage, almost like a matchmaker. You're matching the right borrower with the right lender just to make the magic happen.
Yeah. They're a lot easier to come by someone like you than it is to try and approach a lender directly or even find them. Wouldn't know where to start.
Yeah,
so,
and the online providers. Let me just add this: the online providers. If you want to go and sort of do a shop, you can do it, corporately as well as you can with sort of all the sort of money supermarket type things that retail type. Okay, all they go on is rate. It's always caveated by the word subject to status.
Yeah.
That's it.
Yeah. Okay, Mike. Brilliant. Thank you very much. I know we're a bit tight on time, but is there anything else you'd like to share just before we?
No, I mean, from my point of view, if you want to go and find me on LinkedIn, please just type my name in, Mike Deacon, or look at my company page, which is Asset Based Finance and Leasing Limited. Thanks very much, Tom, for having me on this podcast today. I hope that anyone who watches it gets value, and if you want to get in touch, just find me.
Thanks, Mike. We'll put your contact details in the show notes so anyone can contact you. And good luck with the book sale.
Yeah, thank you very much indeed. And we'll stay in touch, and hopefully you'll have more success with more podcasters like me.
Thanks for listening. As I mentioned at the beginning of the episode, this podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. On that page, you'll find the link to apply.